I'm Jorge Ganosa, President, CEO, and co-founder of Fortuna Silver Mines.
Fantastic. How many common shares, and also if you, how many shares do you hold of Fortuna Silver Mines?
I have roughly 2 million shares, little over 2 million shares.
Fantastic. Is that including options and RSUs and other incentive units?
No. Those are shares that I outright own. On top of that, I have a significant portion of my compensation in restricted share units and other long-term incentives.
And so, could you summarize the first quarter of this year for Fortuna?
First quarter has been a continuation of strong performance for the company since we brought our Seguela mine into production back in mid-2023. So, our production in terms of ounces, about 112,000 ounces of gold, was a bit softer than what we recorded in the previous 2 quarters, but well within the plans that we have for the year to deliver roughly, between 460 and almost 500,000 ounces of gold equivalents, right?
I think it would be good to summarize what's the production and cost guidance for the year on a company level.
I just mentioned it, Jasper. We are guiding to produce about 460 to 500,000 ounces of gold. That's gold equivalents. 85% of that is actual gold, and 10% is silver, and the balance is byproduct lead and zinc. So on aggregate, if we do a bit of alchemy and turn everything into gold, our gold equivalent production is in the range that I just described. In terms of all-in sustaining cost, we're guiding $1,550 roughly for the year, between $1,500, $1,600. Midfield would be around 1,550. We're traveling well to meet that or hopefully land below that for the year.
And then, so you're changing the name or you at least have brought it up from Fortuna Silver Mines to Fortuna Mining, which better reflects the business. But in the past, you have been skeptical about a name change. Why change the name now?
It's not that we've been skeptical about changing the name. It just has not been a priority over the last 2-3 years. Fortuna, silver is in our heritage. We started, yes, with a strategic focus on silver back 20 years ago, Jasper. 20 years have lapsed, and but around 2016, sometime in 2016, we made the strategic decision to start looking also at gold opportunities, and we have been able to expand our business more on the side of gold. So we believe that our name today, although existing investors who are acquainted with the company, don't have objections nor anything to say about a name that has international and market recognition. For new investors, Fortuna Silver Mines, when only 10% of revenue comes from silver, can be a bit deceiving, right? So, of course, we want a name that reflects who we are today and where we are going. And even though we still look for silver opportunities, I believe removing silver just gives us the flexibility and focuses the name on what is it that we do, which is mining. No? So we continue looking for silver opportunities. We have not given up on silver, but silver today is 10% of revenue. It can grow if we find another good silver asset, which we're looking for. But we believe it's just more flexible to have a Fortuna Mining rather than a descriptor like silver, right, today. And the company has a lot of recognition with Fortuna as a brand. So I see a smooth transition in the name.
Thank you for being here today, Paul. Could you tell us about yourself and your career?
Yeah, thank you, Jesper. My name is Paul Weedon, Senior Vice President of Exploration for Fortuna Silver Mines. Geologist, 34 years experience now. Predominantly, last 2/3 of my career has been in the African space, time in Latin America now as well with Fortuna. Prior to that, the first 10, 12 years of my career was in Australasia, Australia, New Zealand, Fiji, So yeah, fairly broad and diverse range, covering everything from generative exploration through to projects, mine build, mine development, mine closure. So yeah, seen a fair bit of the industry.
Could you give us an overview of this year's exploration program? I mean, what's the budget? How many meters are you drilling? Reserve replacement drilling contra greenfield, and also if you could add some how you're allocating these meters towards your projects.
Yeah, thank you. Look, this year is the biggest budget that Fortuna has ever had from an exploration point of view. We're sitting just around the $40 million mark. The bulk of that is being invested in the West African operations with Seguela, Cote d'Ivoire and Senegal taking approximately 21 million of the combined budget. Big programs underway in both of those. Burkina Faso, specifically at Yaramoko, is also getting another 3.5 or so million there. And then over in Mexico, we've got a big program underway at our San Jose operation, focusing primarily on the Yessi vein, as well as the recent joint venture we signed with Riverside Resources in the north of Mexico, where we're doing some generative greenfields exploration there. And down in Argentina, the guys are doing some generative work. And in Peru, we are looking for mine replacement and doing a lot of geophysics and again, generative work there, as well as some historic updates. The focus for us is spread fairly evenly across the portfolio, though, from generative greenfields right through to reserve replacement. Seguela is probably preeminent in that, with a number of prospects emerging through there. The new Kingfisher prospect we announced a press release or two back. We've had the Badior work, as well as ongoing work at Sunrise, Ancien Cooler, and that's rolling through fairly well. Over in Senegal, we've got a big push there on to consolidate and grow the resource base to support the project, and that will also flow out as the pattern has been at Seguela. That will flow out over the next couple of years into target generation and to continue to build on that portfolio. So the split in terms of meters, I couldn't tell you the exact number of meters across the portfolio off the top of my head. We've got 4 rigs turning at Seguela. We've got a couple of rigs up at Yaramoko, plus another one underground. We've got 3 rigs over in Senegal. We've got a couple of rigs over in Mexico. So we're busy. We've got about 12 to 14 rigs on the go at any one time at the moment.
So which assets are you particularly excited about this year?
This is like being asked to choose your favourite child, isn't it? I think Seguela continues to deliver high quality ounces for Fortuna. We've got Kingfisher emerging. It seems that the guys on site have a steady drumbeat of discoveries. We had a good run last year with advancing Gabbro North, Badior, and Kestrel. So they're all relatively small, but they prove the thesis is correct. Previous year we had Sunbird. This year we've got Kingfisher. Kingfisher has currently got 1 drill rig on it. It'll have a second rig joining it shortly. We've drilled nearly 1,000 strike meters of continuous mineralization. If you look at our last press releases, you'll see the setup that we have there for Kingfisher. And we're continuing to get consistent mineralization coming out of it. So again, the guys are showing that the formula works at Seguela. So Seguela is probably the one that I'm most interested in right now. But Burkina up at Yaramoko, the teams there, both surface and underground, have had success in extending and expanding the footprint of the Zone 55 mineralization. And then over in Senegal, the new team over there, putting a lot of hard work into understanding a very complex ore body and making steady progress with that. So, excuse me, how do I choose my favourites? I can't. They all deliver ounces for us. And then over in Latin America, we've got San Jose, which the Yessi vein is continuing to deliver good results for us. So I'm really encouraged by that one.
You bought back the half of the 1.2% NSR royalty on Seguela that Franco-Nevada holds, so you now have 2.6% NSR royalty, and that was just done at $6.7 million US dollars. Very cheap, very accretive for you. Why wasn't it done earlier? Thank you for.
There was a deadline to exercise our option to purchase back the royalty, and we waited until the mine was in production. We were generating the expected cash flows, and then it just made sense to purchase the half of the royalty, at that time, right before expiry. So nothing to read there beyond just, we wanted to exercise the opportunity before it elapsed.
You had a good start to the year. 2.8 grams per ton gold put through the mill, and you milled 4,300 tons per day, give or take. Should 4,300 tons per day, somewhere around that, be sort of the standard run rate going forward, or what do you expect?
I think we can do a bit better than that. We're currently doing about 25% better than what we budgeted for 2024. We are very confident with the work that the team has been able to achieve, expanding the boundaries of the processing facility. And I think we're looking at solidly 1.5, 1.6 million tons of processed ore annually, right? So, yeah. It's important to highlight to the investor that in our feasibility study, we had a $30-40 million expansion in year 3 to achieve the throughput that we are achieving today, less than a year since the start of production, right? So, it's just a very good outcome. We have been able to capture all of the opportunities built into the design of the facility. And that is not always the case.
In Cote d'Ivoire, 2 power generation plants had failures in Q1, and that has led to a shortage of power. How is this impacting your operation, and when do you expect that to be fully resolved?
Since mid-April, late April, we've been battling with intermittent power supply. As you just described, 2 incidents completely unrelated, 2 significant, major power plants in the country came out of line at the same time. Again, 2 completely unrelated events. So one of the plants is back in line, and the other one is expected to be back in line the second one is expected to be back in line, sourcing power to the grid in the month of July. So we're still battling with a bit of intermittent power. We have not modified our guidance for the year at the mine, nor at a consolidated level because of this incident. We are managing it. The government indicates that power should be normalized starting in July. Independent of that, we are currently sourcing a solution, bringing generator sets, gensets to the site, so we can have independently a backup power solution to move the entire operation. We only have backup power today to move critical processes, which is about 1.5 to 10 megawatts of power on site. We're expanding that to roughly 10, and with that, we should be comfortable to move the entire mine. That solution should be in place also in the month of July. In the meantime, we are taking advantage of the expanded capacity of the mill to run when we have power, maximum capacity. Second, we have flexibility in the mine plan, so we are doing a bit of high grading in the antenna pit and in the ancient pit to improve grade against our guidance. And last but not least, we had a very good start of the year in terms of production, and that excess gold we produced in Q1 and early in Q2 is being used also as a cushion that helps guarantee that for the year we will be within guidance.
When do you expect to be finished, or give some with the trade-off studies for the underground mining at Seguela?
Trade-off studies are well advanced, mainly at the Sunbird deposit. No, that has been the focus of our work. So I expect that this second half of the year, the studies are complete, and for our 2025 planning and budgeting exercises and our view of the LOM, we will be able to incorporate, that's an expectation still, additional resources from an underground plan.
So could you walk us through then or summarize the exploration plans for Seguela this year?
Yeah, Seguela is looking at around about a $10 million budget. We're always evaluating whether we need to spend more there. We've got 4 rigs turning, predominantly RC Diamond, and we'll continue that tempo, I think, for the rest of the year. Kingfish is taking a lot of the interest right now, but we're also continuing to grow the satellites. So the exploration pipeline is still very, very active with new prospects that are emerging, as well as looking at the emerging underground potential underneath Sunbird, Ancien, Cooler. These deposits are still open at depth, so we're nowhere near sort of moving down an underground mine at this stage, but we're certainly looking at that inventory and just understanding what needs to get done, while recognising the mill is outperforming. So, as always, that friendly rivalry between exploration and the production guys is back on us to provide more answers for them.
Do you see it being worth to allocate more meters to sort of grow your underground deposits before you have made the sort of the trade-off study, if it's worth?
I don't want to get too far in front of ourselves here. We are always evaluating what the right path is for us at the time and what the future looks like. The underground is not the priority for us just yet. It's rather looking at what options are available to us and does it make sense. I think it's fair to say that the biggest priority for Seguela right now is to advance Kingfisher, given what looks like the size it could be. And the fact that it's an open cut, it has a much more immediate impact on the long-term life of mine operations. Now, we haven't got this into resource yet, so this is quite speculative. But the pace, the frequency in which we deliver new resources at Seguela over the last 5 years suggests that will continue. We'll keep bringing on open cuts, and then as every open cut happens, it will go underground at some point in the future. I just don't know when that point is yet.
So you discovered the Kingfisher. It was announced in March of this year. Can you tell us more about the prospect and what potential do you see for the size and also for the average grade, and from where does mineralization start?
Yeah, mineralization starts about a meter below surface. It's on the next geological package immediately east of the package that hosts Cooler, Sunbird, and Ancien. So it sits in the same host as Boulder and Agouti. So we know that's a mineralized corridor. The overall structural model that we work with, it fits very, very well within that. It's a right-hand flexure on the main shear zone that runs down the contact between 2 major units. We see a strong association with a series of felsic dikes. Again, ticks our search criteria. And at this stage, we've got mineralization over at least a 2 kilometre strike length, of which we've drill defined a continuous 1 kilometre length. It's premature to say what the answers could look like, but we've drilled it for 1,000 metres in strike length. It's 150 vertical metres, and we're averaging, consistently getting 2 to 2.3, 2.4 grams across 25 to 40 metre intervals. And, as the numbers that you see in the press release are consistent with what we've been getting. So, folks can draw their own conclusions. It remains open at depth. We haven't drilled any deeper because we're trying to build out the strike extent first. And then stepping back from Kingfisher, we will continue to look up and down that corridor that we know is mineralized. And seeing what the criteria are for success there, we'll continue to push that same criteria and see what we can find further south and further north. So I think just continues to highlight the prospectivity and the potential for Seguela, given that Kingfisher is less than a kilometre due east of Sunbird. So, it's right there.
And the deposit is a sort of shear-hosted orogenic deposit, or what?
Yeah, all the Seguela deposits are shear-hosted orogenic. This is consistent with all the other deposits. It's just the next major lithological package over.
On your regional package, what would you like to see? I mean, if you, in order to sort of fast-track resource delineation and move, at least, I always have sort of one diamond drill rig drilling at the prospect.
There's nothing in particular there. I mean, we we have a strong track record of delivering new resources at Seguela. We've got 6 open cuts. We've broken another 3 or 4 that are coming through the pipeline. It's the same pace. We've maintained the same cycle of discovery. We have a very, very standard, industry standard technique. We will go through the phases of geochemistry, scout drilling, following it up. If it looks like it's got some size, we add more rigs into it. If I need more funding, I request more funding, but we've got a pretty generous budget. We're spending nearly $1 million a month there. So, there's nothing more that I really need. The guys are very experienced at doing this role. And we repurpose rigs as we see the need. So there's no magic formula. There's no change to what we're doing. So I think Jasper, that's really the secret there. We don't change what we're doing.
Moving on to Yaramoko. Yaramoko is in harvest mode. You have run rate for this year and also next year. What's your personal expectation for Yaramoko's mine life?
I was at the mine 10 days ago, and we continue to see opportunities to expand resources in the immediate vicinity of the boundaries of our resources deep in zone 55, about 900 meters below surface. For the benefit of your audience, when we acquired Roxgold back in 2021, the Yaramoko mine was set for closure in 2023. And it is through exploration and success with the drill bit that the mine just didn't close in 2023. We had an exceptional year in 2023 where we upgraded production guidance. We produced more gold than anticipated in 2023. We're going to have a very strong 2024, a very strong 2025. And as things stand today, the mine exhausts reserves in 2026. But we continue to see opportunities for discovery of additional ounces in the near vicinity of the mine. So I wouldn't be surprised if we can roll another year into the mine plan.
Could you summarize this year's drilling campaign at Yaramoko and your main efforts to extend the mine life, which is currently less than 2 years in your 2P reserves?
Yeah, that's right. Look, Yaramoko keeps on giving. The underground, the Zone 55 strike extensions, specifically out to the west, the lower west, every time we drill, we seem to extend the resource envelope further out to the west, and that's been, as we learn more about the ore body, and we're always learning about this ore body, it keeps extending, and so that's where we're seeing growth. I was there on site 10 days ago, and I was fortunate enough to see the 1 millionth ounce get poured from Yaramoko. That's not bad for 8 years of operation. So that was a great occasion. But the growth is coming from underground drilling, extending Zone 55 to the west, down at depth. We're also getting some quite encouraging drill extensions on the greater Bagassi South vein system. The new area there is called Tango, named after the gate nearby, Tango Gate, where there's some artisanal workings, and we're working around those areas and getting some quite good results. So where that goes, I don't know yet. It's still very early, but we're seeing extensions there. And then recent reviews of the rest of the Bagassi South veins have highlighted other opportunities there. We've got a small vein mining team there, so narrow vein, which is changing the opportunities that are available to us. And we're looking to grow those out as well. And then the rest of the team, Razak, my exploration manager there, is always pushing new prospects, and we've got a multitude of different styles available to us on the wider property. So he's always raising new anomalies, new prospects, new opportunities we're testing. So, where's the growth come from? The immediate mine growth has come from Zone 55 extensions. The intermediate term is potentially coming from the open cut work that we're building on, and the long-term potential is what Razak's working on from an exploration point of view.
What probability would you assign that you replace reserves this year?
We're getting into geological fantasy world here. I think there's a reasonable chance we'll add some more ounces into the mine plan. We've done well for the last couple of years by adding in sort of another incremental 12 months, 15 months. Maybe we see something similar. Honestly, I don't know at the moment, yes, but we're a few weeks away from building the models, so it's a bit hard to give you any more of a definite answer than that.
And then, so Unless you make a game-changing discovery at Diamba Sud, could you walk us through the timeline for resource delineation, economic studies, permitting, and ultimately, roughly when you could make a construction decision?
Yes. I remind you that when we did the acquisition of Chesser in September of last year, we incorporated the 850,000 ounces of gold they had as a historic resource in our mineral inventory. So we did not incorporate those 850,000 ounces into our own. We're treating it as a historic resource, as an appendix. No? Why? Because I think the prudent thing to do is for us to do more drilling, enhance our geologic understanding of the deposit, mineralization controls, and all of that, and then seek to expand the resource. Bear in mind that Chesser did excellent work. They have discovered a very exciting deposit, but they were more focused on discovery rather than truly providing a sound, basic understanding of the geology and control, which is essential if we're going to think about moving this project through the development pipeline. So we continue drilling for discovery, but at the same time, we're doing a very thorough, detailed job to understand the geologic model and the mineralization controls. This is not a simple deposit. It's a complex deposit. It's a complex geologic environment. And so I expect that before the end of the year, around the end of the year, we should be in a position to have a geologic resource that is well supported by a coherent geologic and mineralization model. And with that, that informs and feeds or updated preliminary economic assessment for this deposit.
Diamba Sud, what have you learned of Diamba Sud since acquiring it last year?
It's definitely a complicated beast. And we knew that going into it. The team on the ground have been looking at these rocks for a while. It's structurally very complex. It's lithologically quite complex. There's evolving theories on the evolution of mineralization in that southern part of Senegal. There is a lot of potential that we still don't understand how it all holds together in a broad geological sense. There's competing ideas, and we're building and then rebuilding the geological models that support that all the time. And so, yeah, it's a great deposit. I like complexity. Complexity leads to more ore bodies, and that's certainly what we're seeing there.
Super. And you're allocating almost 43,000 meters to it this year. What questions are you trying to answer with this year's drilling program?
What we're trying to achieve there is a few things. One is to confirm and upgrade the previous resources that we inherited from Chester, so take them through to a 43101 style resource statement. Two is to confirm and grow and get confidence in the emerging geological models that we have there, like why is the gold where it is, what are the controls on the mineralization, and then third, start to grow out that pipeline of new discoveries on the property so we can continue to build the pipeline and take it beyond the 1 million ounces that we're hoping to aim for.
Your four deposits that sort of were in the Chesser resource statement. So is the mineralized rock oxidized?
Some of it is, yeah. It depends on where you are. Area D is probably the deepest. The pit called Area D has the deepest oxide profile. Area A, which is adjacent to it, also has a decent oxide profile, but also has a decent fresh rock, sulfide component to it. The other projects, the other anomalies that we've got there, have got variable oxide profiles. It just depends on where you are there.
So far, where has the resource growth come from primarily?
It's been a combination of things. One is extensions to the existing resource, so drilling down dip, down plunge, along strike, and just growing it that way. So step by step growth. But more recently, we've moved away from the main pits, Area A and Area D, and we're now tidying up around some of the satellite deposits that were further south, and we're growing those. That's where the new ounces are potentially going to come from. Are these satellite ones, which Chester had identified but they just haven't had the opportunity to really get in there and start doing the work. And that includes Baguda, which is right down to the south. There's a little appendix of a permit that sits about 15, 17 kilometres south of the main one. So we've been drilling down there as well. So yeah, it's the satellite anomalies that we're drilling off at the moment. And we've got an auger program, infill auger program that's due to commence shortly that will continue to define new anomalies. There's no shortage of targets though. We're about to commence another rate and rank exercise on the targets just to ensure that we've got the right targets lined up earlier in the system.
And do you think that this year, with your 43,000 meters or 42.7, will be enough to move into development and do economic studies, or do you think you would like to have another drilling campaign because you're seeing that the scale could be grown?
The explorationist in me would always see more drilling. I'll keep drilling until we run out of ore. The Fortuna view of me would also be, no, I want to see this advanced to a project as quick as we can. So there's always a natural tension there between the two. Look, I would anticipate that next year we'll be moving into the PEA space and moving this thing through as quick as we can through the feasibility studies. But look, we will keep pushing exploration as hard as we can. The projects team, we're in constant communication with them. When is the right time to pull the trigger on the study? That's the discussion that we're always working on.
So when it comes to San Jose, do you expect to be able to keep the cost below $25 an ounce on a silver equivalent basis with your sort of cost reduction measures as you're planning to close or put the mining care and maintenance at the end of the year?
Yes, we're working hard at it. We're doing a lot of optimization. We have implemented already some of those measures. We have had a reduction of headcount in personnel, renegotiating tariffs with some of our contractors. The peso has been easing a bit as an outcome of the election, so that will help us. In Mexico, the appreciation of the local currency weighed heavily on our cost inflation. But really, the main driver here to understand if we can extend the life of mine resides in the discovery of this new vein, Yesi. We're drilling with 3-4 rigs. We expect we can have a resource estimate by year end. It has been, yes, an exciting discovery. We just need to see if it graduates into an exciting reserve that we can plug into a mine plan. And investors need to understand that these are two different things. An exciting resource does not necessarily mature into an exciting resource reserve, right?
What mine life does San Jose currently have?
We've got about a year to go, give or take a few months. The team on the ground is going through a lot of focus on cost management, and that therefore drives more resource back into the mine plan. But sitting behind that is the work we're doing on the Yesi vein right now. We've got 3 drill rigs turning on that one from surface, getting good results. We're expanding that footprint. The mine planning team will shortly update the models there and see what we can have. So I'd love to be able to tell you what we're going to do at the moment, but I don't know, to be honest. We're building the model as we speak. So, let's have this call 6 months from now and I can give you a better answer.
Could you give any sort of
ballpark?
And not ballpark, but sort of sense of Yesi vein's size potential?
Sure. So at the moment, we have drilled 350 meters, maybe, strike meters, for about 350 meters depth. Average width's around about 3.5 meters, and we're running at around about 250, 300 silver equivalent grade through that block. There's some very high patches in there as well. There's definitely higher grade core within it, but it still remains open both up dip and to the southwest. To the northeast, it flexes and then blends in with the Victoria mineralized zone. So there's a there's a double opportunity there for us, that if and when the SE vein makes its way into the mine plan, it potentially changes the economics in a favourable way for the VMZ, so it adds more mass to that area, and therefore that changes the economics of the VMZ mining as well as the SE. So it's a bit of a compounding effect. The encouragement I'm getting is that we still haven't found the limits of SE, and it's still open to what would be the southwest and up dip as well. So yeah, it's early days. Watch this space.
Do you think you have enough time and resources to sort of drill it out enough that you're comfortable with it bringing into the mine plan before you have to go into care and maintenance?
I think we will, yeah. It's going to be tight, but I think we will. There's a team on the ground, the mine team there are very, very focused on this, and it's a very straightforward process to do for us. It's not that far away from the current capital development, so another couple hundred meters worth of development is all we'd need to get into it. And that, we've already, even when we got onto it late last year, the team already started doing some conceptual what ifs. If this came off, what would it need to do? What would it need to look like? What sort of grade? How would we mine it? And so on and so on. So there's been a lot of preparatory work that's been done already. So yeah, I'm pretty confident that time won't be an issue for us.
Lindero, could you summarize the Arizora prospect, which is where you will be drilling and doing exploration, generative work this year?
Yeah, look at Lindero itself. The nature and style of that deposit has got a long runway in front of it. We've got the Arizaro satellite deposit 2.5-3 kilometers away from it. We've parked that because the grade is essentially the same as what we have at Lindero, so there's that's at the end of the mine life. The team there is looking both on the property, for, going back over the data to see historic anomalies, historic potential. Has it been followed up? What have we learned? But more importantly, we're also looking to see if we can grow in the district. So what else is within sort of 100 kilometres of Lindero that we can use our resources, our exploration teams, our admin stores, etc., that sort of stuff, to grow other opportunities there. Yeah, it's not a big program. It's more desktop, more field visits, more discussing with potential partners for acquisition opportunities. So it's growing Lindero in that space.
And then, could you summarize this year's exploration plans for Caylloma?
Cayyoma's this year is one where we're focusing again on target generation. Grade is king at Caylloma, so any grade that we find that's higher than the current mine grade would be obviously a benefit to the operation. But bearing in mind that Caylloma's got a 9-10 year mine life in front of it on the Animus vein alone, so what we're looking to do now is not find new resources to extend the mine life per se, but rather can we find higher grade just to help with the overall project. There's no shortage of historic targets. Hans and his team are looking at those now. We've just last week finished a big big magnetics program. We've got another phase of geophysics to start 2 days from now. The guys are chasing down other deposits that we're looking. We're doing a lot of mapping and sampling on the surface. So this year is seeing a lot of reconnaissance work and framing up targets for next year. We run into a budget cycle in September. All the guys will get together and we'll review the budget process. So the expectation is that in September we'll have a very clear view of what we want to go into 2025's exploration program with, based off the reconnaissance work we've done here in 24.
And then, so my final question is, are you performing any exploration work on any asset that we haven't mentioned yet?
No, I think we've covered all the main ones. We've got the new joint venture in Mexico with Riverside, and we've got the new joint venture in Cote d'Ivoire with Taraco. So, this year is sort of marking a bit of a push for Fortuna to get back into the generative space, but being selective. Working with good partners who've got good ground that we feel comfortable working with. And, there is an allocation of our budget that is reserved for that style of work. That's that long-term strategic growth. Organic ounces are the cheapest ounces that you'll get. Driving that is the big priority for this year. And I've got teams continually looking for new prospects in Mexico and in Peru, Argentina, West Africa. So we're still looking for more. to bolt into the portfolio.
You are issuing 150 to 175 million US dollars. You could clarify if you think it will be 175 or 150 at a 3.75% interest rate due in 2021. So that good terms, and they could be converted into into shares at 6.59 US dollars a share as a convertible senior notes. What's the rationale for this financing, and also how you're looking to deploy the money?
It's very simple. We currently have in place a corporate credit facility with banks. We pay an interest rate of 7.7%, almost 8%. And it is a covenant-heavy facility, full of restrictions. That's a covenant-heavy means the facility places a lot of restrictions on the company. And those restrictions get even harder if something happens in the business, right? So we are exchanging expensive money under a very rigid structure in our corporate facility for a facility that lowers the interest rate from almost 8 to 3.75 and gives us a 5-year period to pay the principal. And if there is conversion would take place at $6.59. So, we have been messaging for almost a year now to the investors and our shareholders that one of our top priorities in the company today is to put together a fortress balance sheet. I strongly believe that mining companies must use times like this to strengthen the balance sheet and provide maximum flexibility. So this is a step in that direction. We are removing an expensive, restrictive credit facility for one that provides most flexibility at a lower cost. No? And if the facility were to be converted, it would be at a $6.59. So in 5 years. So, we are enhancing our liquidity, lowering our cost of capital. We're doing it at a moment of strength. The notes were extremely well received. We went out to raise $150 million, 172 considering the green shoe or option to place an additional. And there was $500 million, $500 million worth of interest on the notes. So it was very successful. Now, the shares sold off in the market on the day of the announcement as if we had a catastrophic failure in our business, as if we had a tailings facility collapse or something catastrophic like that. So, markets are dominated by, traders momentum traders, short sellers, and sometimes traders who just don't know what they do, but they just trade. So, I think we look long-term. Let me give you an example. Last year, when our shares were trading at $2.70, we wanted to start our buyback program, but because of the judicial issues we were contesting with in Mexico around our permit, which, by the way, we never lost a day of production in Mexico because any of those nonsensical issues we were dealing with the government, but we had a lawsuit. No, we were in court with the government, and because of that, the credit facility restricted us from acting on the share buyback. We were seeing our shares trading at $2.70. We had a share buyback program in place, and we couldn't participate because of the dispute in Mexico. And that was very painful for us, right? For example, let me put ourselves in another scenario here, Jasper. Today, the Seguela mine, which is an excellent asset and every day is looking bigger and better, represents 35% of our NAV. And I think that contribution will grow because the mine is looking like it has potential to grow even further. So let's say that mine that is 40% of our NAV eventually has a problem. It could be anything, a climatic event, a power outage, or a breakdown of the SAG mill, you name it, or a coup d'etat in the country. Any event like that will trigger the covenants in the existing bank facility we have. And at a time like that, when you most need your liquidity, you're losing cash flow because of the problem, your shares price is coming down, and the liquidity available on the credit line gets frozen. So what we're doing is mitigating the risks of the business by putting together a fortress balance sheet with maximum flexibility. People must understand that mining is a capital-intensive business and it's a risky business. And it is our responsibility as management of the company to mitigate the risks of the business. And one of the important tools that we have is putting together a fortress balance sheet with maximum flexibility. So that is what we have done. And if the share price drop in a day, they will come back. But we are setting the company to mitigate the risks of the near term and medium term. And at the same time, we're giving ourselves opportunity to capture emerging opportunities in the jurisdictions where we operate with that flexible balance sheet. So, I think it's an excellent move for the long term. And, if short-term traders, hedge funds who like to short stocks and momentum traders want to have their day in the market, so be it. We have to think medium, long term, right?
Could you summarize what will continue to drive shareholder value for Fortuna this year?
We're working to consolidate Fortuna as a leading mid-sized producer. I think we have levers for growth to achieve this objective. One is Seguela. We continue to make discoveries. Please pay attention, follow how the Kingfisher discovery unfolds. We announced a discovery a few months ago, Kingfisher at the Seguela mine. Still early days, but I just expanded the exploration budget for an additional $5-6 million this year, so we can continue funding drilling at Kingfisher with the aim of producing an initial resource by year end. I'm particularly very excited about this discovery. We just need a bit more time to prove to ourselves and the market that it is, it meets our expectations. I believe it has potential to exceed them. But it's an exciting new discovery. It's a blind discovery. And Diamba Sud, of course, being able to advance Diamba Sud.